Welcome back. You're tuned into Chartbusters here on CNBC TV18. Well, we've got a new kid on the block, or the kid that's making a comeback in a different avatar. That's Siemens Energy. It's listed at a premium to its discovered price after its demerger. Vamakshi joins us to break that down for us. Vama?
Well, Nigel, with the listing, the company has become the largest listed pure-play power T&D equipment player, followed by Hitachi Energy as well as GE Vernova T&D. Keep in mind, let's also look at some of the financials for the company in SY24, which is the September year ended that Siemens generally follows. Revenue stood at 6,345 crore with an EBITDA margin of 15.6%, and this is expected to rise significantly going forward. The estimates from brokerages will come up for you. Jefferies is expecting a revenue CAGR of from SY25 to 27 of 36%, PAT CAGR of almost 49% with EBITDA margins at 19.5%. Motilal Oswal on the flip side is expecting 25% revenue CAGR accompanied with a 31% PAT CAGR with an EBITDA margin of almost 21.4%. And largely the expectation is the growth will be driven by sustained capex from public as well as private sectors in India's T&D industry, emerging segments such as data centers, which have a huge growth potential, and multiple HVDC tenders in India, which each have an average addressable opportunity for a company like Siemens Energy of almost 10,000 crore rupees per project. Now, as far as the valuations are concerned, at the listing price, which is 2840, the price to earnings multiple for Siemens Energy stands at 51 times basis the SY25 EPS estimates. It is lower as compared to some of its peers like Hitachi Energy as well as GE Vernova T&D. And as far as brokerage recommendations are concerned, Jefferies has a target price of 3,700, which shows an upside potential of almost 30% from the listed price, and Motilal Oswal has a target price of almost 3,000 rupees per share. Now, also keep in mind that Siemens Energy is likely to be removed from the MSCI Global Standard Index with effect from June 20th, and based on the indicative price used by MSCI, the estimated passive outflow of almost $170 to $180 million could be expected. Apart from that, it is also important to monitor how FTSE responds to this post-listing.
We take that point, Vamakshi. Thanks a lot for that. It's up around 3%. In fact, we'll also